Well, there are a lot of questions about investing in crypto. A lot of people want to know, how do you even get started? And then once you're in it, how do you pick the best investments? Well, we've got a panel today that can kind of explain this and walk us through the whole process and help us learn about this really brand new industry, fascinating industry. So we've got Steve Kokinos, CEO of Algorand, with us. Also Anthony Scaramucci, founder and managing partner of SkyBridge. Matt Zhang, founder and managing partner of Hivemind. David Siemer, CEO of Wave Financial. Amy Liu, partner at Digital. And I'm Jane King. I'll be moderating this. So let's start with Steve. How has the profile of the investor, the firms investing in crypto, changed over the last couple of years? I kind of feel like 2021 was a kind of a pivotal year in this industry. How did you see it?
Yeah, well, I think it's been, evolving, certainly over the past few years. And I think if you look back to, say, 2017, when there was a lot of initial excitement, I think it was very, retail driven. I also think there wasn't nearly the amount of development that's been going on in the market now. And I think if you look to 2021 and up to present, I think the number of both sort of interesting entrepreneurs, but also projects and scale that are starting to be generated is very, very different. And I think that, naturally, as people are seeing success and scale driven to public blockchain networks and things like DeFi apps and NFTs, I think we're starting to see both bigger brands looking to launch projects and also, I'd say larger kind of institutional investors coming into the space and looking for exposure for sure. So I think it's been a big shift. I think one of the other things, though, is that the investments and kind of the role of investors, I think, is changing as crypto projects deploy. And I think in kind of traditional VC, investments would be made, and then people would sort of wait for the company to mature and return and maybe contribute along the way. Whereas I think in kind of the blockchain and crypto world, definitely there's more support needed with launches, providing liquidity. And I think, really it's a new model all around, both for investors and for projects launching, because this is really the first time that financial tools are being innovated on in a public setting. I think really up until now, it's been largely in the private domain of financial institutions.
Yeah, well, that's a good lead into the next question. And maybe Anthony, you can kind of pick this up. I mean, what are some of the motivations behind individuals and firms that are looking to get into crypto? Are there some trends that you can point to?
So I think it's interesting what Steve is saying is more on the corporate level, and it's more on the use case level. I'm sort of looking at it from the investor level. What tokens or coins, cryptocurrencies should we be invested in that are going to have the highest volume, the highest use case, therefore the highest value? And so sadly to say, I think the first thing is the obvious thing. This is so early, it's beyond ridiculous. We're talking about 2% market saturation. And so this is my 33rd year in the business, which is a sign that I'm getting old, but it's also a sign that I'm at a level from an institutional process where I recognize that many institutions are curious about what's happening on the blockchain or cryptocurrencies in general, but are still very reluctant. So my number one job right now, apropos to the name of our company, SkyBridge, is to build a bridge between what Steve is working on, what Matt is developing, where things are going to eventually be minted, Jane, and capital allocation into those things. And so what I would say to you is very, very early, and it's very important for people on this call and elsewhere to explain to people and to reduce their worry. Big institutions do not want to be embarrassed. Big institutions don't want to be the quote unquote last person in the party or last person in the pool. And then you learn Bill Murray is there with you and there's a baby Ruth at the bottom of the pool, right? So we have to convince these people that it's okay to get in the water is safe. And what Steve's working on is ultimately going to be game changing as a delayering mechanism for the economy.
Yeah, interesting. That is kind of a tough needle to thread for these big companies because they don't want to be too late and they don't want to be too early either. Matt, what are you seeing in terms of challenges? I think we all agree education is one thing, still a lot of that out there. I mean, what are some challenges that you're seeing in your business?
Yeah, thank you for the question. And I guess just to echo what Anthony and Steve are both saying, and I think if you pick up the key words, it's about institutional adoption here. And I think a lot of that actually is coming back to your question regarding the challenges and concerns. I personally don't think education is a challenge at all. Actually, given the social media and all of the ways people will be able to absorb the knowledge, a lot of us, regardless of what your day job is, actually getting a lot of different ways of exposures into Web3, crypto, blockchain. People are very, very curious about it. I think right now the biggest challenges industry is facing is really the regulation clarity, right? If you come back to Anthony was saying earlier, a lot of the large institutions, they're curious, they want to get into the space, but they're hesitant because they really don't know whether they're in the black or the white, because there is absolutely no tolerance being the gray. So now I would argue that, regulation every single country, including the United States, are at a different pace looking at this. And they should actually take their time because it's a paradigm shift. That means a lot of things will get changed. And they need to actually really think very carefully how to govern and regulate things like stablecoins, CBDCs, how to curate and support DeFi like ecosystem, because it's going to happen. But more importantly, giving clear guidance so people clearly know what to do and what not to do. When that happens, you will just see a lot of institutional investors be much, much more willing to be able to jump to the space. And we're already seeing that happening. Look, coming from my own background, previously, before founding Hivemind about a couple of months ago, I've been working in Citi investment bank for about 15 years. So when I was there, I see all of this from the other side. We're in constant dialogue to sort of discussing internally with the regulators and thinking about how we're going to approach this from Citi standpoint. And I'm sure all our friends and colleagues on Wall Street doing exactly the same. Mm-hmm. So I guess a long way to answer your question, really, but I think if we be able to get the government regulators to be more supportive, and now you're seeing a lot of that's already happening. Mayor-elect Eric Adams and also the mayor in Miami, Francis Suarez, they're all very, very supportive of both innovation and crypto in specific. We just need to get more support and lobby innovation in the right way. So then we see a lot of institutional adoption. The institutional investor will be what will get this space from 2 trillion to 20 trillion.
Okay, thanks, Matt. And that's a great point about the regulation. I mean, David, how is the ecosystem responding to that? And what's going on in Washington and what's going on with some of these cities like New York and Miami?
Sure. Yeah. I mean, regulation is always a hot topic in crypto. We're an SEC registered, RIA, so, highly regulated, and all our products are highly regulated. I spent a lot of time with FINRA and the SEC, which is a joy. And right now, the landscape is pretty bleak in the U.S. Gensler's method seems to be say very scary things, but not actually offer any real guidance, which works. Every time he says scary things, the market dips a little bit, but there's no path to any way to comply with the scary things he says. He says things like come in the tent, register, things like that. Like register is what? You can't register. There's no path to register today. So the regulatory landscape in the U.S. is going to continue to be bleak, I think, for a pretty long time, at least the next year, probably the next several years. Fortunately, we're seeing kind of the opposite in the rest of the world, and crypto is really the first tech that went global day one. And Singapore is being very progressive, and even London is being relatively progressive. EU, Switzerland, even Canada is miles ahead of where anyone in the U.S. is. They allowed a spot ETF already. So I think the U.S. is just going to be a laggard regulatorily. That's going to push a lot of jobs out of the U.S., which is really unfortunate. But it's, I don't see any way to change that in the current administration. So as far as the other part of your question, I mean, I'll offer a counterpoint to what Anthony and Steve said. I'm actually shocked over the last couple of years, the composition of investors in the space hasn't changed more. 2 years ago, 2% of all crypto was managed. Grayscale and a lot of the venture funds like Pantera's of the world. Today, it's less than 4%. For all this, and so these headlines are amazing. I love that Goldman, Morgan Stanley, Fidelity offer Bitcoin exposure products finally. 30 to 50 largest financial stations do. Now, the combined dollars of all those offerings is like less than $10 billion, as far as I know. So it's not a lot of money. And it's kind of shocking that this is still such a retail space. It's the bond market, equity markets, 70-something% managed. and crypto is at 4. And this is the world's hardest asset class to evaluate as a VC, 27-year VC, is cryptographic math, global scale networking, bizarre consensus models that often don't even work, weird economic models. It's a very hard asset class for someone to enter and really understand at a deep level. The hardest I've ever seen in my life as a deep tech investor, and it's all retail. Which won't be the case forever, but it's going to be the case for a while.
Well, that's kind of interesting because all we've heard is like it's a hedge against inflation, and then we haven't really seen that over the past couple of months. So, Amy, feel free to weigh in on anything that's been said so far, and then also your thoughts on the maturation of the industry. Are we where we need to be for institutional investing?
Yeah, thanks for that question. Going back to your initial one, how has the profile of an investor changed in this space? I think one characteristic that I'd add to Steve's great description is investing in this space is much more accessible today. It's no longer a big boys club whereby it's the private funds, the big venture capital studios or firms. But today, I mean, it's very, very easy for the average person to spin up a DAO or to participate in a syndicate, right? You're seeing a lot more individual investors participate in these rounds. And the way that one can participate in these projects is very interesting. You can participate in traditional equity. You can participate by purchasing NFTs in the various rounds, or you can participate via purchasing tokens, whether or not in pre-sale or public sale. And so that's been really interesting because it changes the dynamic and the competitive landscape for when investors are vying for allocations. Every major project that's promising in this space right now, as many of the investors on this call probably know, is oversubscribed by a multiple. And so you as an investor not only are competing against, multiple individuals and many, many more funds around the world and all sorts of, every individual person is probably part of a handful of syndicates, a handful of DAOs. Me, myself, I'm a full-time investor in digital, but I'm also part of a DAO called Dow Jones, and I'm investing, alongside Disclosure, Dylan Francis, Steve Aoki, et cetera. And in what world would I be investing alongside all of these big prominent people in the new crypto world? And so as an investor, you really have to almost fight your way to the cap table now. What is your value add? And you're seeing entrepreneurs and founders become a lot more savvy to that. Capital is so cheap, and now they're asking, what can you bring to the table? And I think that's really, really great because every investor that's on the cap table now is value add, and they're actively contributing to the building of this company. And what that lends to, I think someone else on this call mentioned, is the exit horizons are different now. And a lot of that value add is from investors actively adding value. Other things that I'm thinking about right now, crypto operates in waves. So it's very hard for an investor, personally speaking, to become competent and expert in every single vertical, right? We saw crypto go through DeFi, then through NFTs, then through DAOs, and then now buzzwords like Metaverse and Web3 are hovering around. And so the way I think about investing is I'm not going to be a gaming expert, right? I'm not going to know the difference between whether a first person shooter or a multiplayer or, drop your gaming acronym is a good game or not, but I can pattern spot. If I talk to 5 different gaming studios or gaming companies, and they're all using the same infrastructure layer, then I want to talk to that company that's building the infrastructure layer. And so I think about that not only at the sort of gaming infrastructure layer of that, but then also when I'm thinking about emerging economies, which is an area that digital is very focused on, I'm also thinking about what is that stack that's powering that infrastructure layer. And so although we're a metaverse first company and we're investing in everything in the metaverse, we're also looking at exchanges in Africa because you need to obtain your crypto somehow.
Okay, so interesting. And we'll come back to you with NFTs here in a second too. So let's, Steve, let me direct this to you. And then anybody else who wants to chime in, feel free to do that. We can just kind of make this more casual. So Steve, how is your model different than a traditional investing model when it comes to crypto?
Well, I think there's a bunch of differences. I think first, I have like a few different thoughts on this one. I think echoing what David said before, understanding the tech, I think, is very important in crypto. And I think if you take a step back, one thing that public blockchain networks and crypto represents is a shift in a world where counterparty risk is about like the person across from you and with the firm they work at and kind of a regulatory environment to one where it's really algorithmic trust. And so understanding the underlying technology is very, very important. And so I think that as part of anyone's either investment decisions or decisions on where to build applications, they need to really consider that carefully. And I think when you think about decentralization, that can often be like a very sort of like difficult construct to wrap your head around, but really that's about preventing any one party from being able to prevent another party from transacting. And so this idea that you have kind of immutable transactions, you have censor-proof systems that people can use, but that ultimately those things only hold up if you understand the technology and that it's good. And I think that's a very kind of different paradigm for people. I think the second is, I think tokenization, whether in the form of NFTs or fungible tokens, represents like new ways to bring economics not only to investors and sort of founders, but to the community as a whole. And I think one of the biggest things that's I think a little bit misunderstood right now is that what we're starting to really see is the value in community and the value the communities represent in terms of helping, kind of define sort of the properties and the underlying economic value of assets. And that can make a big difference, one way or the other. But beyond that, it also means, I think there's a benefit here that the community is able to benefit from the value of whether it's networks or tokens or other things in a way that's simply impossible in a traditional, let's say, private equity or, investing model. And I think the result of that is that you do have networks that just have fundamentally different sort of utility properties and ways of interacting and transacting with people than has been the case in the past. So I think that in a lot of instances, investing, I think in a kind of old world, sort of old people would look at, what, kind of a company represents, whereas here you have a network with lots of contributors and people in the community rallying around it. I think understanding what the value of that, the totality of that contribution is, I think is very important. And as people look to, different assets and applications, they need to like think carefully as to whether, whether sort of the right properties are there. And so I think there is sort of this balance of technical kind of adoption and, what community elements are there to look at. But, those are all things that would be pretty foreign, I think, in a lot of traditional places.
Yeah. So Anthony and Matt, I want you both to weigh in on altcoins. Bitcoin, clearly, the king of all of this. Ethereum gets a lot of attention. But a lot of these altcoins, Solana, have really performed well this year. And people are kind of looking at them and not sure. How do you feel about altcoins? Anthony, go first, and then we'll have Matt chime in.
Well, I mean, I first have to comment on what Steve is saying, okay, because Steve is an incredibly polite guy. And so basically what Steve was saying, that after 30 years of working in tech and understanding the blockchain, he's the CEO of Algorand for a reason. And he's basically telling you, take a strong look at Algorand because it has all the technical properties associated with the future. If people are going to connect and use the blockchain as a delayering mechanism, Algorand solves the trilemma. It's doing it at a very low cost. It's doing it in a very carbon-friendly way. So that's basically what Steve was saying in an unbelievably polite way, Jane. Okay, so I just wanted to Steve's whisper.
We're definitely going to check out the company.
He's just too polite. But the second thing I would say is also apropos to what Steve is talking about. I'm in the process of writing a book about Algorand right now. And basically what we have several layer one technologies, cryptocurrencies that will be part of the future of transactions. And so I think this is a lot like the cloud. We entered the cloud. People were like, there is no way I'm putting my personal data or corporate data on somebody else's computer, which is effectively what the cloud is. And then people said, okay, wait a minute, this is remarkably more efficient for me, time saving, and it's going to be better for my corporation. And then you had all of these cloud companies be developed, whether it's AWS or Microsoft, That's what's going on right now. So these altcoins, I don't love the word because it sounds like we're smoking pot or something like that, altcoins. What they really are, though, are transactional technologies. They're going to bring the global commercial activity into the future. It's going to take out intermediaries. And so Algorand has a purpose. Solana will have a purpose. Perhaps Ethereum will have a longer term purpose. It's got a big community now, but it may or may not have the longest term purpose. I'll turn it over to Matt, but I think there'll be 10 or 12 winners, and Algorand will probably be at the top of that heap.
Yeah, agreed. And thanks, Anthony. I think, first of all, obviously not investment wise to give out, but I just want to comment about the space in general, right? So a lot of what Anthony was saying, I'm going to take it from a different angle. And I would say, like, one, we at Hivemind looking at the landscape and we go and trying to vet a project or protocol, we're trying to typically look at three things. Number one, we look at technology, which Steve talked about. Fundamentally, that's what really matters. Number two, we want to look at the team. The team is as important as technology. You can have a stellar first-class technology, but if the team have a very short-sighted view, unfortunately, it just won't survive enduring a long-term industry. Number three, which is typically the product of the top two I just mentioned, is the community, right? Typically, a good technology with a good founding team can curate a very strong community. When you're having all of the three, that's laid the foundation of what you said, Jane, altcoin to be relatively successful. And I think that's always what we look at. And again, we chose Algorand, Hivemind chose Algorand as one of our first ecosystem partners because of that. As Anthony mentioned, I know Steve for a few years now. He's extremely smart, very humble. Him and Silvio and Zhang built an amazing team. Everybody there is very mature. They're having a very long-term vision, and technology is just very, very good. And I think one Hivemind going on and finding other project ecosystem support, that's going to be our Bible to look at. Community, technology, and the team. We at Hivemind, we don't really bet the market become higher. We bet the market become bigger. There's a completely different difference here. And I think that if we all put our thoughts together and try and just focus and be patient being built, and really looking at the price every single second, I think the space will just evolve as something which is going to be a paradigm shift.
Okay, very interesting. And David, I want to ask you about projects. How do you vet projects? There are so many blockchain projects with their own tokens. And how do you possibly sift through that and find out what has promise?
Yeah, I mean, so, most people know the numbers, about 18,000 new projects launched in crypto in the last 3 years, roughly. Okay. We didn't look at all of them, obviously. We did look about a little over 1,000 a year across our 3 venture strategy funds. The basic thought process of looking at a crypto project is the same as early stage VC, and everything in crypto is early stage. So as I think Matt was saying, a lot of it goes down to team, and we're mostly seed stage investors. So we're investing before there's, a blockchain to fully evaluate in most cases. So we invest in lots of DEXs, decentralized exchanges, decentralized lending platforms. We used to do a lot of layer one investments. That era is seeming somewhat past now. But yeah, it really, for us, it always comes down to team. I've been a VC for a very long time, invest in a lot of companies, and a lot of my biggest winners, the business plan very vaguely resembled what I actually thought I was investing in, but the team figured out how to make something work. And that's actually much more true in crypto, I find, than even in traditional VC. Like, people are very nimble. You have to be, there's a lot of creative destruction around here. Everyone tries models. Everything is still very experimental in this asset class. So a lot of experiments don't work, but people pivot and they manage to find something that does work. And that's been very true across our entire portfolio. As I said before, it's a very hard asset class to evaluate. It touches on, I think, like literally every discipline I can think of that a VC would need. It's cloud services, it's networking, it's math, it's weird economic models in most cases, weird tokenomics that are balanced kind of on a pinhead, whether or not they work in a lot of cases, especially in the decentralized application world. But great teams usually figure it out if you give them enough capital and enough runway. And that's how we approach it.
Okay. So Amy, I want to get your thoughts on NFTs and the metaverse, and how can money be made here? We've seen some big brands get, Walmart is getting involved, and Nike, and of course, Facebook changed their name. I mean, how do you see the space? How can people watch it and make money?
Yeah, that's an excellent question. I think that's something that we're all working towards right now. We're in what I like to call the recipe printing phase of the metaverse or NFTs, and that's a reference to when the internet first came about. People were just publishing recipes, cookbook recipes that you could get in a cookbook. They're just duplicating it digitally. And that's not very much value add. And frankly, that's what we're seeing a lot of right now. Certainly last year, that was all of the hype. And that's why NFTs are called all of the bad words that you call them. What was the value of NFTs, right? If you're just taking an existing piece of art, an existing song, and slapping the blockchain on top of it. We're starting to see a lot more utility, which is very, very exciting. My thesis is, NFTs, non-fungible tokens, are basically just unique pieces of data that are traveling along the blockchain, and they are able to capture all of the value of the particular blockchain that they're on. So eventually all data will be traveling via some form of NFTs on the blockchain. And you're starting to see exciting use cases, right? When you're thinking about why these brands, let's just take fashion, why all of these fashion brands are onboarding into the metaverse. It's if you believe in the thesis that more and more activity and more IRL activity will be consumed and adopted in a virtual setting, whether that's, a kid going home and signing onto their Fortnite account and socially engaging with their friend in the virtual playground instead of, in the playground outside, or logging on and watching a Travis Scott concert instead of going to, the Staples Center and watching a concert in real life. These are all examples of more attention and more time and more energy spent in the metaverse. So naturally, more consumption would also be conducted in the metaverse, right? And so if you have an external presence and identity, I'm wearing this beautiful Alexander Wang sweater. Hey, I actually want the same sweater to be on my persona in the metaverse as I'm engaging with other people. And especially given the COVID pandemic, where more and more people are spending time at home and interacting with each other virtually, you want to extend your style, your presence, your persona digitally to all the people that you're engaging with. Also, your digital presence, the utility of that is actually much greater than IRL presence. If I have my sweater and I'm engaging with one person right now, only that one person seeing my sweater, that the bang for my buck is very low, versus I now am wearing this sweater on my avatar on Twitter, and however many of my thousands of followers are seeing this, however many people I'm engaging with in Fortnite are seeing this. All of a sudden, you're seeing that utility multiple. So I think you're going to see some quite really exciting use cases. I mean, you saw Nike purchase Artifact. They're recognizing this. And just taking sneakers as an example, people already spend hundreds of dollars, thousands of dollars on a pair of sneakers, and they keep it in a shoebox with the tags on, unopened in their closet, and that's accruing value. People understand that, but people are having a hard time understand why an Artifact sneaker that's digital is also generating the same amount of value. But actually, that sneaker, you can wear it around on your avatar virtually, capture that utility, and then still resell it, versus that pair of sneakers that's just sitting in your background. So I think fashion is going to have a major play, and you're already starting to see that with all the major fashion labels starting to enter the space. That's going to tie in directly with your identity, how you represent yourself via all of the various applications and platforms. And then on top of that, as more and more people onboard, you're going to see, your question was, how do people make money in the metaverse? Well, NFTs, metaverse, intersecting with DeFi is going to be really, really, really exciting. If I have a really cool NFT, perhaps I have 10 sneakers. I'm not wearing 9 of the 10 sneakers. Well, maybe there's a world where I can take those 9 sneakers, loan them out, and wear and tear doesn't exist, in the metaverse. That sneaker is still going to be brand spanking new by the time I get it back. Maybe I can loan them out, and now I'm making a return on that. Maybe I can lock it up and it becomes an asset, backing a loan where I can take out money. And then I can go, start a new business, buy other tokens, buy other NFTs. And so it's going to be really, really exciting when we see DeFi and NFTs take off.
Yeah. Well, I have a 12 and a 14-year-old who have VR headsets. And so I can kind of see how
this is what This is what I was going to say is there's one group that understands this stuff like natively, which is kids.
Yeah.
It's not confusing to them at all. They spend time in digital worlds and physical world. And I think for them, it's definitely a place where you can like bring more people together than you can in real life. And owning artifacts and valuing things that are digital only is something that's natural to them. So I think there is a little bit, I'm not trying to be ageist, but I think that there is sort of a group of young people who've sort of grown up natively in video games and kind of understand this stuff in a very straightforward way. And the idea that you would then branch out from games into things like concerts and other kinds of activities is, again, I think, going to be a very natural sort of outgrowth. And I would just tack on the NFT side. One thing I would tack on is that more than anything else, I think NFTs represent a way, a unit of ownership for digital items, on the internet that haven't really, and there's been no way to do that before, which is why this idea of digital scarcity is new. And I think that increasingly being able to establish value for things that people didn't even really price in the past, sort of represents like a means of economic growth. I think, like Matt said, you're looking to grow the entire market, not necessarily for like directional prices of any one thing. I think this is a whole new asset class that will emerge where, now content creators, let's say you create a piece of art for the entirety of history, you sell that piece of art and then that's the end of it. You never get any more money from that, irrespective of how much it sells for in subsequent transactions. Whereas with NFTs, as a creator, now you can have a permanent share of any subsequent transactions that happen. So if your art explodes down the line, you have a way of benefiting economically from that too. And I think it's going to take a little while for kind of the ramifications of that to kind of, really be fully understood.
Well, it's a paradigm shift. So it is, kind of difficult. So we've only got about 7 more minutes left. So I'd like each of you to spend 1 minute and just talk about what you're looking forward to in 2022 in this space. Anthony, let's start with you.
Well, I'm looking forward to taking advantage of the volatility in the space. And I'm going to remind people of something that Jeff Bezos said on the 20th anniversary of Amazon. So Amazon now will be public 25 years on May 15th, 2022. He took it public in 1997. And what Jeff said on the 20th anniversary, someone asked him, someone like you, Jane, said, well, the volatility was enormous. You lost 50% of value 8 times, one time down 95%. Yet a $10,000 investment in Amazon in May of 1997 is now worth $22 million today. What do you say? And what Jeff said is, well, I was always focused on the fundamentals. If users were increasing and revenues were increasing and the business lines were expanding, then I knew I had directionally the right thing. And I'll remind everybody on this call that the market is a voting machine in the short term. It's a popularity contest, but it's a weighing machine in the long term. So what I'm looking forward to is the breakout for Algorand mid to the end of this year as people start to discover what Matt and Steve are working on, and they realize that this is going to be one of the large-scale cryptocurrencies of the future. And as we see through the volatility and start weighing fundamentals, that's going to happen this year. I'm looking forward to it.
All right, Matt, weigh in 2022.
Yeah, sure. So I guess at a micro level, 3 things we're doing a lot of work on. Number 1 is gaming as a social movement, right? We're seeing a lot of play to earn already. I think that bringing some of the Southeast Asia, Latin America, Africa, and a lot of those continents and countries and people there actually to the developer world and participating in those communities and sharing gains, sharing returns is a great thing, not just from a financial perspective, but also from a social perspective. Number 2, people touch base on NFT. We're very excited about seeing the utilities built on top of NFT, right? I know Steve at Algorand, they're working on a lot of things in the music space. Music is a great example, how you can leverage an NFT to build something which is cool, usable, and fundamentally change how the backend infrastructure of the industry is actually built. The last thing, micro level, we're excited about looking forward 2022 is DAO. And we think DAO fundamentally changed how a corporation can govern themselves. There's a self-governance sort of framework there. It's very early days. People still exploring what's the right way to come about it. But I think there's a lot of cool things can happen for that as well. Macro level, I echo what Anthony was saying. I think funny enough, it's always easier to predicting what happens in 5 years than what's happening tomorrow. Right? None of us know what Bitcoin and Ethereum are going to end up higher or lower tomorrow. But I think a lot of people on this call probably have a very strong view what it's going to be in 5 years' time. So I think in markets like this, just focus about building. I think 2022 is a year of applications, right? We talk a lot about technology fundamentals like the railroad about getting people on ramp, but now people are on ramp. At least some of them are on ramp. The next goal is actually what you can actually build that have a real meaningless and eternal value that you build on ramp. And I think we're going to see a lot of that happening.
David, 2022.
Yeah, I mean, I'll go back to NFTs, which everyone's kind of talking about in general. I look at it a little bit differently. Like I was a VC, back in '95 when Netscape came out, and forever in crypto, I've been waiting for like a Netscape moment. And it wasn't, token speculation. It obviously isn't DeFi, though it got a little closer. But I think NFTs are it. This is the first thing everyone understands. People get music, they get gaming, they do gaming all day. And this is actually the moment where people actually interact with crypto for like hours a day. Which is what we've all been kind of waiting for. We went from almost no NFT holders a year ago to about 8 million today. And, and it's just accelerating incredibly, all over the world. You're seeing in South America, we're seeing Asia, of course. China is going to be allowing people to launch NFT exchanges, even though they don't like crypto. So it won't be a token, but anyway. So I think that's going to just be the absolute driver. I as much, I guess press and news around NFTs, and there's a lot, I think it's actually way too little for just how big the opportunity is. And that's not saying that the prices aren't elevated, there won't be some wipeouts along the way, but I think this is what's going to bring the whole world to crypto. It wasn't going to be Bitcoin, that's nice, and it wasn't going to be pure kind of DeFi algorithms. It's going to be people can actually touch and feel something and bond with it and make it their avatar, take it into a game. You look at it all day, and it's going to become part of their life, and that's what we've been waiting for. I've been waiting for. I've been in this space for over 10 years now. That's what I've been waiting for.
So Amy, real quickly, and then we'll finish up with Steve.
Sure. Echoing Matt, I think I'm most excited about gaming and the emerging economies. Gaming acting as a gateway and portal into everything that we've talked about today. And emerging markets, I'm particularly excited about because just like the youth of today see digitalization and blockchain and get it immediately, I think that people for example, in many of these economies that are very bullish on play to earn gaming, say like the Philippines, parts of Africa, they see the utility immediately because they don't have the fallback of the infrastructure. They don't have the infrastructure, they don't have the banking infrastructure that they can just fall back on right today. So they see it immediately. They're already in many circumstances, they're already onboarded onto digital money. In countries where M-Pesa is, for example, prominent, they're already using mobile peer-to-peer payments and not using cash. So to onboard them onto blockchain is going to be really, really seamless. And I'm particularly excited because the metaverse is it's a new cultural movement. And this is an opportunity for people in different parts of the world, especially ones that have been traditionally sort of locked out by the centralized players, for them to partake in the narrative. And so we're really focused on that cultural shift, and to be able to play a role in that is really exciting.
Thank you, Amy. And just real quick final thoughts, Steve, before we close out this panel.
Yeah, I would agree with everything everyone said, but I might sum it up a little bit more simply, which is, today probably 1% or less than 1% of the internet population has actually used blockchain apps. And I think 2022 is going to be the year where we start to see a big shift in demand from that going, it has to go from 1 to probably 100 over the next decade. And I think it's going to drive a lot of demand for public blockchain networks, like Algorand and others. But I also think, it's these use cases that we've been talking about that are going to, ultimately bring people into the applications. And I think we'll look back probably not after 2022, but after, several years. And I think that, a lot of these concepts are just going to be part of everyday life. And I think you'll see, especially in emerging markets like LATAM and other places, people's first interaction with money and ability to earn yield and earn digitally is going to be through blockchain and crypto. And a lot of those people will never even know what it means to have a traditional bank account and probably haven't had it before. So I think we're sort of right at the precipice of that. So it's going to be interesting to watch.
I think we are all involved in an extremely interesting industry, and it's going to be fascinating to watch. Thank you so much. Great conversation, such good information. Thank you all.
Thank you.
Thank you, Jane.